Hi guys, today I'm going to go through how to effectively do a top-down analysis and how to avoid some common mistakes. All right, so this can apply to any type of trading methodology, but here the focus will be on ICT's liquidity and inefficiency concepts, which I use. Okay, so my name's Harvest. I'm a 36-year-old trader with 6 years of experience. I mainly use ICT's concepts along with my own discoveries over the years. So, why is the topic of how to effectively do a top down analysis important? Well, it's important to traders who are keen on improving their win rate and catching those high RR trades. Whilst those things don't define a successful trader, only consistent profitability and sound risk management does. I believe an effective top down approach to framing trades is a worthwhile endeavor. Better trade setups give you less stress, more profit, and just more freedom of time. So I think the first thing to start and mention is what is a top-down analysis, right? It is basically doing analysis on a higher time frame and working yourself down. So you start on a higher time frame to get in line with where you or your strategy is showing price is likely moving to. Then on a lower time frame, waiting for your trade setup to form, and then either entering on that time frame or going to an even lower time frame for an entry signal. If the weekly chart is bearish, for example, and you see a bullish candle on the hourly chart, you may be fooled into trading in the wrong direction if you don't have a effective top-down analysis. For the highest probability, you need to be in sync with the higher time frame, right? So I'll show you the steps of my approach here, which is split into three separate parts. Okay, I have my bias, and then I have my narrative, and then I have my confirmation and entry. So, what is my bias? I have my bias, which is built on the monthly, weekly, and daily time frame for myself. This helps me determine the direction I want to trade in. If my analysis is bullish, I want to look for longs, and vice versa for shorts. I don't want to go against the higher time frame draw on liquidity. You always want to be in line of that. At the very least, if you're wrong on your trade, you can get back and continue. Okay. So, secondly, okay, my bias. What does it mean? Where does price want to go? Where's the draw on liquidity for my concepts? Okay, for your concepts or whatever technical analysis you're using, it's basically where does price want to go or react from on the highest time frame in your that you're using for your trade analysis. Okay, and basically I will look for trades in that direction. Number two, I have my narrative. By definition, narrative is like it means story, right? So what story will price tell me? So I'm looking on a lower time frame to see how price may potentially form, such as attacking a pool of liquidity before reversing, retracing, expanding here and there, etc. I may have a few scenarios that I may be anticipating and looking for. So I'd be able to strike when the iron's hot, right? So I'll anticipate all these possible scenarios to validate my bias. If I see them playing out, okay, I can say my bias seems to be correct. Now let me go to number three, confirmation and entry. All right. What will give me the signal to validate my narrative? As in, what will price form on a lower time frame, even lower time frame, to confirm my trade? Now you don't necessarily need to be on an even lower time frame, but you can if you do want to attempt to catch those higher RR type of trades. But I suggest only doing this if you have the experience and are willing to kind of compromise with perhaps at least a slightly less win rate in most occasions. So I'll enter a trade once I get a confirmation. For me, number three is the most mechanical part of my top-down approach, and number two and number one has some discretionary elements to it, pattern recognition, stuff like that. So number three may be a shift in market structure with bearish fair value gaps being disrespected and bullish fair value gaps being created if I'm looking for a long, for example. All right, so let's go in the chart and let's see how it would look like, sourcing for a trade using the replay tool. So I'll just hide these drawings for now. And let's go up and see what do we have. Okay, so I'm on the dollar Swiss franc Forex pair. let's see what has unfolded in price. So at this point, we see some liquidity being attacked here before expanding even lower. Okay, so the buy side liquidity was taken here, price rebalances, and then starts aggressively expanding lower again. All right, so on the monthly time frame, we have a monthly SIBI here. I'll show you what that looks like. Over here, a monthly SIBI, and nothing else on the monthly except this large wick, which usually gets filled from my experience. I have that annotated. Now we are on the weekly. We have a 1 week and 2 week SIBI up here. We have this order block here, a SIBI down here, and some relatively equal lows along with sell side that was recently taken. Okay, so at this point, I'm looking for a long to potentially come into this gap and potentially come into this monthly gap, let's say. Okay, with the narrative that the sell side liquidity was taken and now some buy side liquidity on lower time frames to be taken, and efficiencies internal range liquidity will be targeted as well. So on the weekly, let's fast forward and see what happens. Okay, 1 week. All right, so at this point, I want to see this bearish fair value gap be completely disrespected, right? I don't want to see price respecting it, closing below it, and start expanding lower. Okay, we can see that it clearly expanded above of it. So at this point, in most cases, I'd be looking for a long inside this inversion fair value gap. So normally I would now annotate it as a inversion fair value gap, a possible inversion fair value gap if we were to continue even higher. Okay, see price tap into there. Let's see where this one closes. Okay. All right, closes above, and then the next candle starts expanding a little bit lower. But quite nicely, we've created a bullish value gap, aka buy side imbalance, sell side inefficiency. BC, 1 week over here. My weekly gaps are in blue, my monthly gaps are in green. That's how I differentiate it. So what I like about this is that we have some overlapping gaps, overlapping confluence, along with these highs over here, which signify somewhat of a breaker. All right, so let's go down to the daily. Let me remove this notations. Okay, so this is what's happening on the daily. Let's see if price comes into this gap. Most likely, okay. Comes in, steps up. This one comes in, and the next on Thursday, on Friday, it breaks Thursday's low. Not quite Wednesday's low on this time frame. I see a small daily gap here, which is nice. Signifying that price is in line with institutional order flow, and we break higher to the upside. So this is great. Okay, so at this point, after this daily close, I'd be looking for a potential long. Let's see if we can get a gap on the daily. Okay, daily. So we get on the daily. Let's go on the 4 hour. Let's get rid of this. Okay. All right. So I already had this annotated here. So I just want to point out that all this price action has already offered fair value. So according to my analysis, I don't expect price to come all the way back down here, and most into here, but likely into this gap here with a wick, which I like. That's one of my signature gaps. And there's relative equal lows, I believe, on the lower time frame. So let me just plot this out here. You see orange is my hourly gaps. Got a 4 hour gap here with a wick. Beautiful. So I'm going to look for price to potentially come down there. Let's see how the 4 hours plays out. Okay, let's go down to the hourly now. At this point, you can always look for, you can have your POI and you can refine your entry. For example, this gap down here. This looks interesting. Anything below an hour is red for me. So I'd be looking for price to take out these relative equal low body lows and come into this 4-hour gap potentially. Okay, this is the Asian range. Nice clean highs here. I really like that with the anticipation that we're going higher. Okay, that's my narrative. Building upon my bias. Hopefully it comes into this hourly. If it doesn't, you can potentially look at getting a trade if it expands above this level. Okay, they expanded quite fast above it. Let's go back to the 4-hour. That was the 15-minute. All right, so you see it did not come here, but if you miss that trade, we don't chase price. We have a 4-hour here as well. Wait. Okay. All right, close below that level, which we do not, and it made another bearish fair value gap. We do not want to take one there. Okay, it comes into this 1 hour and violently expands. So yeah, if we waited, we could have caught that one. Well, it was actually quite fast, so it's likely during 2 a.m. probably FOMC news on a Wednesday. All right, so let's look for a trade. So the hourly, we got an hourly gap here. Let me move this up since this is not relevant. Hourly gap. Okay, we got a 4-hour gap that we can use for an inversion gap. Okay, we're going into this hourly now. Wait. Ay. All right, well, okay, I accidentally pressed the replay tool too quickly. Couldn't get that trade, but perhaps this one. All right, let's just go down to the 15-minute, see if there's anything that we could catch. A gap down here. There's equal highs being created. Into the gap we go. All right, using the replay tool is not so easy because you can't see price form, but we're already in this 1-hour gap. London took out liquidity. Even if we get in here, we have our stop below here. Let's see if we can catch a trade. Stop loss of 16 pips. It's not too bad. If we got in at the close of that 4-hour, say targeting these highs. Not to mention, we're also targeting these equal highs and this monthly order block here. All right, so I'm not going to go into the daily time frame to have a look because it might show us what happened. Already we know what happened. I know what happened, and anyone who can zoom out will know. Let's fast forward this a bit. Oh, okay. Well, this one almost stopped us out, but it respected this hourly block here. All right. Of course, where someone would take partials and stuff is irrelevant. At the moment, we're just talking about how to do a top-down analysis. So just to recap on that, right, we saw what happened here on the weekly, and now we have this weekly gap here, which is quite nice. I don't think price is there. Let's fast forward it to today. Should be soon. And this is where we are today. So this is an area of interest to me now. this monthly block, right? So when price gets there, I will transpose down to a lower time frame and see if any of my narratives play out. If it does, it validates my outlook for higher prices. Okay, so this is a weekly busy. Now this area now is a point of interest. All right, where would I go? Maybe deeper into here, and maybe even higher prices, equal highs, gaps, etc. Right. So we're not here to guess where price is going to go, but basically, if price comes down to this area, I'd be looking for a possible continuation to the upside, right? And you can go to any time frame to have a look to see if any thing is forming. Here we got a 2-week gap which is formed. On the monthly, we're in this gap now, so natural to expect some sort of retracement. But I do feel that large wicks like this of a body tend to be traded to at least a bit. So I expect to go a bit more into premium before we were to possibly head lower. Okay, so that's my anticipation. That's my bias of these highs here. These are body highs, which are also interesting. I would like to target that as well. So let's see what happens if price comes all the way down to this weekly gap. I'd be looking to take a long. All right, so recap, have your bias. Basically means direction. All right, higher time frame, then you have your narrative, what you're expecting to see in price. That can also be part of your confirmation and entry, depending on your strategy. And and there you go. One common mistake I have to mention that I see people do is their top-down analysis is basically, let me just hide this for a second. It's basically looking at the entire chart and trying to guess where price is going to go. Oh, it looks like it's going up. It looks like it's in a downtrend. The best type of analysis is looking at only a few candles, a few higher time frame candles, and building a bias there, right? Just like looking at this general area and having small targets, and yeah, basically just having small targets on that higher time frame. And if you go on a lower time frame, you can catch that wave and you can get you can catch a lot of pips, get a lot of high RR trades if that's what you're into. But you don't have to target something so high, right? Because then this would just be, it would be step number 2 already, where you're looking at narrative of price taking liquidity, expanding, yada yada yada. If you wanted to look on your weekly for your narrative, then go to the yearly chart and see what's there, right? Here we got a yearly gap, go trade it to very high, but close down here, retracement, and now we're expanding lower, etc., etc. And then you'd have your, if you had the anticipation of lower prices uh, or even higher prices to take these areas out for whatever reason, then you can go on the weekly and check out the narrative. Although you might have to wait a while, right? So yeah, I hope you found this video insightful and that it helps enhance your trading. If you need clarification about the content you saw in this video, or if you're still struggling with finding your groove as a trader and need some personal guidance or mentorship, feel free to reach out to me via TradingView's private message or on X, formerly known as Twitter. And till next time, happy trading.